Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. I'd like to talk about what's going on in the equity markets this morning. The equity market still continues in a confirmed uptrend. Last week, the S&P and NASDAQ were moving relatively pretty flat through the week. Nothing exciting there, but the one big exciting thing was small caps and mid cap stocks did very well. They both increased those indexes about 1.6%. Now last week we talked about that we need to see the market breadth improve a little bit more. And that's kind of indeed what we're seeing. If we're starting to see the small cap and the mid cap stocks, which have pretty much been lagging this rally. It's all just been a large cap rally, so it's good to see them on the move. Now in the sectors, we're still seeing that the builders are doing very well, banks are doing very well, and healthcare is improving. Again, another lagging sector that's improving. Now, if we look at the S&P Mid-Cap 400 Index, it's just right at its November highs. It corrected with the rest of the market, still below its 200-day, so we're looking to see if it can move past that. Similar scenario on the S&P 600, the Small Cap Index, also right at its November highs, below its 200-day moving average, looking if we can get above that. Now, the Russell 2000 Small Cap Index, it's about 2 points above its November high, so we're looking to see if that can continue, still below its 200-day moving average. However, all these indexes have been making higher highs and higher lows lately and catching up to the rest of the market, and that's very good because we're going to get this broad participation. So one of the stocks we're looking at this morning is, could be called a small cap, mid cap stock. Its capitalization is about $1.6 billion. It's called Cambrex Corporation. And what they do is manufacture active pharmaceutical ingredients and small molecules for biotech and pharmaceutical companies. Most companies these days, the trend is to outsource the manufacturing process, and just while they're focusing on designing the drugs and marketing and selling them, Cambrex is actually producing their drugs in their factories for them. Cambrex has factories in the United States, Europe, and India, worldwide, and they're growing pretty good. Just to take a look at the 3-year earnings per share average growth rate is 35%. Last 3 quarters EPS growth rate is at 168%. Last quarter earnings came in a surprise at about 5%, increased at 43%. Sales came in at 14%. And the estimates for earnings growth for next quarter about 29%. And the 3-year sales growth rate's about, average growth rate's about 16%. Estimates for 2015 are for an increase of 60% on the earnings sides, and for 2016 at 14%. So here's why we like the stock. The stock hit in early November, 54.60, formed a large base, corrected with the market, tried to come up again with the market in, that was started correcting in August, so mid-November started to come up. Hit about 52.59 and pulled back. Now last week it exceeded that 52.59, that's initial buy point, and this morning it's moving on heavy volume past that 54.60 buy point. So if you're an aggressive trader, this trade may be for you or may not. You may need to consult your financial advisor if this is a trade for you. For full disclosure, in one of my portfolios, I am nibbling on this stock this morning right past that 54.60 buy point. Now if the stock were to fall, if you were to buy it here and it fall below $50, the trade may not work. That'd be somewhere where you want to put the stop, and that's the way it goes. So let price and volume be your guide. Keep your eye on the market. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.